Welcome to this week's Forex forecast for the week ending June 23rd, 2023. My name is Justin Bennett with Daily Price Action, and in today's forecast, we're going to talk about the DXY, the euro, the pound, the Australian dollar, and also the US dollar versus the Swiss franc. Now, if you've not joined my partner, Prime XBT, be sure to do so, seeing the link in the description here on YouTube, or if you're on the website, click on the link that says brokers. You can get up to a $7,000 trading bonus when you deposit through my link and also trade Forex, crypto, commodities, and indices. And if you deposit at least $500, I will give you lifetime access to our trading group. All right, so starting here with the DXY, the US dollar index, we had a significant pullback late last week following CPI and also FOMC. Now, this was a more aggressive pullback than what I was looking for. I was anticipating a continuation of this healthy looking correction that we saw up here. So I was looking for more of a pullback down here into the 103 area, followed by a bounce from here. Okay, now we did not get that, obviously. We got the move below 103, and currently the DXY is testing a somewhat of a must-hold area for bulls, and the reason for that, I explained this last week, but you can see that over the past few months, what we've seen from the DXY is we have this swing high up here, and now we have this recent one. Okay, so 102.20 is going to be the last opportunity for dollar bulls to carve a higher low. Okay, because if we see this break down, all of a sudden we have a series of equal lows down here at 100.8, which is the year-to-date low. And then we also have this lower high up here. And that starts to look relatively bearish for the dollar. All right, so 102.20, this area down here is going to be significant going into this week. And you can see where these two trend lines, just to kind of explain what I have going on, you can see this trend line up here. We've got these highs back in this area, and this does connect with that last swing high. So this is going to be one to watch if we see more consolidation from the dollar, whether it be down here or up here first. This trend line up here is going to be one to watch over the coming weeks. Now, this lower trend line is the one that extends off of that 2017 high, I believe it is. If we go back here to, let's say, the 5-day chart, you can see how this looks, where going back here to 2017, early 2017, you can see that we've got this high back here. All right, so very prominent swing high, another prominent swing high here in 2020, and then we've got lows across this level. Okay, so this is going to be one to watch, and really this area down here, right around 100.8, that's going to be the one that is a must hold for dollar bulls. If we were to see that breakdown over the coming weeks, then we are potentially looking at a macro bearish scenario for the dollar that puts it back inside of this range. Okay, and that would be, again, very bearish for the dollar. But for now, I think that it's a mistake getting too bearish on the dollar simply because it is still above that area. And also, this is just sideways consolidation up here. All right, so next up, let's take a look at the EURUSD. And this is another one that caught me off guard. I think a lot of traders got caught off guard by this move late last week. I was expecting to move up here above 108.30, this area back here. Okay, so this was resistance back in this area. And I was looking for a stop loss run up here toward this area, followed by a rotation lower. Now, obviously, we did not get that. The market not only took out 108.20, 108.30, but also this area up around 109.30. Now, the reason that's significant is if we look here at the monthly time frame, all right, you can see that back here, we've got two highs, okay, two monthly highs right off of 109.30. And this month back here, okay, closed above it. And then we got the close right back below. Now, we haven't had confirmation of this as a bearish engulfing candle. The same thing with this candle back here. Both of these were potential bearish engulfing candles, but they never confirmed because we never got that close below the low of this candle. Okay, so right now, just sideways action from the euro. And this area up here is going to be very critical for the EURUSD over the coming days and weeks. So it's a little bit tricky right now because we do have the euro trading between two critical levels here. The first one is that 109.30 level that I just showed you, and also this area up here around 109.70. All right, so you can see that back here, we've got several lows in this area. Okay, so this is going to be resistance here this week and support down here at 109.30. So essentially for the euro, if we do get a sustained break above this area around 109.70, that puts it back inside of this range, in which case we are probably looking at a move up here toward 110.90, 111, and that probably also coincides with the DXY testing the year-to-date low. Now, alternatively, if we get a pullback early this week, sustained break below 109.30, then we could see a rotation lower into this area down here around 108.20. All right, so that's what I'm looking for right now. just some indecision to end last week. So it is a little bit tricky to call this one from here. I do think, though, given the extent of last week's rally, I would not be at all surprised to see a rotation lower early this week, potentially down here into this consolidation area, and then potentially from there, a bounce back here toward this level. I would be a little bit surprised if we do see the euro just continue to move higher next week without some type of pullback first to really flush out those late longs. So we saw the British pound break above a significant area last week, a confluence of resistance right around 127.40. You can see that this is the top of this pattern, this trend line off of the highs from back here in August, and also a key horizontal, which I'll show you in a moment. Now, we do have some significant event risk coming up for the pound this week, including Wednesday CPI and also a BOE rate decision on Thursday. So those are going to be critical events. And really, it is going to come down to whether the pound can stay above 127.40 over the coming days. That's going to be the area to watch on the higher time frames. All right, so we do have the break higher, and this horizontal level, if we go back here to, let's say, a 3-day time frame, you can see why I have these two levels on my chart. In fact, 3 levels. So this one down here, at 127.40 that coincides with that trend line, you can see that back here, right, in 2020, this was a key pivot for the pound. And this area up here around 31.70, you can see this was also a key pivot during that period. So these are going to be levels to watch along with 130. All right, so all significant levels for the pound. So if we look here at the daily time frame, right, this is how I'm approaching it this week. I think we are likely to see a rotation lower, a pullback down here. Like I said, with the euro to kind of flush out some late longs. I would be surprised, given the extent of this rally, if we just see the pound do this. I would think that, something like this is more appropriate. Maybe we get to push higher first, but then a pullback down here, flush out those late longs. And also with next week's event risk that we have with CPI and also the BOE, I would expect some type of retest down here in this area. Now, if the pound can hold above 127.40, all right, hold this on the daily time frame, right, consolidate down here, then we could see that move up toward 130, potentially 131.70 to continue this breakout. Now, if we see the pound close back below this, all right, this up here becomes a fake out, and we're looking at a move down here toward this trend line. So that's how I'm looking at that this week. Again, we do have some event risk coming up this week, so be careful trading the pound. So next up, I want to talk about the Australian dollar, which we have some really clean levels to play here. Now, I completely missed this fake out down here. I was watching it, and I didn't pull the trigger on it. Wish I had in hindsight, of course. So you can see back here, we got the move below this area around 65.80. This was a key support area down here. You can see we got the close below for several candles. In fact, over a week, it traded down here, closed back above here, retested as support. And since that time, we had a very significant rally. Now, the market also took out last week this area up around 67.80, 67.90. So the way I'm looking at this for the week ahead is going to be, if we see the Australian dollar close back below this area around 68.70 or so on the higher time frames. So lose this area next week, and this up here becomes a minor fake out. We likely see that retest down here, off of these highs, this previous range resistance back here, right around 67.80 or so, and that becomes our key support level. Now, the market could just continue higher after last week, but like I've said with some of these other markets, this rally has gotten, kind of extended here, and I would expect some type of pullback to flush out those late longs. It's typically not that easy where you can just start a week and just buy here and sell up here, right? Maybe we get that, but I do think that we're likely to see some type of pullback. Now, if over the coming days, if the dollar can really strengthen, and we see the stock market start to pull back, and this fails, this level down here fails, then this up here becomes a fake out, just like this one down here was. All right, and we essentially have the Australian dollar running both sides of this range, in which case we're looking at a more significant correction. All right, but for now, the levels I'm watching is going to be 68.70, and then also this area around 67.80, and resistance based on last week's close comes in up here right around 0.7. So last up, I want to talk about the dollar versus the Swiss franc, and this one is a little bit controversial in the sense that the dollar overall looks relatively weak. The DXY right now, even though it's holding support, it did not end last week on a bullish note. However, if you look at the dollar versus the franc, this one shows a little bit of a different story. Okay, now you can see where, the market recently broke out from this trend line. It's not the strongest trend line, out there, but you can see where we've got these prominent swing highs off of this level, including this one right here just before the breakout. Okay, so we had the breakout from this right here on this candle, and since that time, we've had a rounded retest. Okay, so getting bearish on this pair, in my opinion, right now, based on where last week closed, is a mistake, in my opinion. Just because based on this falling wedge, we could see a move higher. However, here's the thing, and this is where waiting for confirmation comes into play. If we look at the 4-hour time frame, all right, you can see where we've got off of some of these lows and highs, we have what appears to be a channel right here in this area. Okay, so if we look at these highs up here and draw our levels across, this is kind of what I'm watching next week. All right, we really need to see the market close back inside of this channel right here. So you can see we've got these two highs and we've got these lows through here, also this one and this last one before the breakdown. So in order to long the dollar versus the franc, really you could long it down here somewhere, sure, look for a pullback, into this area, but it's a little bit risky considering the fact that the market is trading below this channel up here. Okay, so I think that a better play might be to wait for a higher time frame reclaim up here if we get it as a show of strength. Okay, so potentially reclaim up here, put it back inside of this channel, and all of a sudden we're looking at a move back here toward the channel resistance up here and potentially that 0.91 level. Now, alternatively, okay, if the dollar versus the franc can't do that, then we are potentially looking at a close below this trend line, okay, and this breakout fails. And, look, like I said, the dollar really at this point, even though it's holding support, it doesn't really look all that bullish. You can see right here from this channel, again, it is trading below this channel support, that previous channel support. So if this area fails, this trend line down here, okay, if that fails right around 0.89, then we're looking at this support down here, right around 0.88. If that fails, then of course we are looking at lower down here toward this trend line. Okay, so you've got to be a little bit careful with this one right now. Trading early in the week here is ill-advised in my opinion. It's better to wait for either a reclaim of this channel that it lost or that close below this trend line and potentially even a close below these lows down here around 0.88. All right, so a little bit more time is needed here on this one, but it does give a different view of the dollar because just based on this falling wedge that broke out recently in that retest, it does look relatively bullish, but you do have to be careful considering the indecision that we're seeing right now from the dollar. All right, guys, so that's it for today's video. I hope it was helpful. If it was, be sure to like the video and subscribe to the channel. And don't forget to sign up to my partner, Prime XBT. Get up to a $7,000 bonus and trade Forex, crypto, commodities, and indices. See the link in the description, or if you're on the website, click on that link that says brokers, and you'll see the link for Prime XBT there on that page. Have a great rest of the weekend. Trade well out there next week, and I'll talk to you again soon.